Over the last month or so, iron ore has lost both its 50-day moving average that was in late March, as well as the 200-day moving average over the last couple of days. And during this month or so, since late March, since mid-March, iron ore has lost around 30% or more of its value. What's going on right here? Let's have a look at the details, and welcome to myfinanceteacher.org, where we look at a range of assets, mostly from the perspective of asset price cycles. And talking about the price cycles for iron ore, clearly any cycle is generally based on market sentiment. We're going to talk about market sentiment near the end of this video, so stay tuned. Historically though, if you look at the cycles for iron ore, there are several ways to identify the turning points of those cycles, the cycle lows and the cycle tops. We measure the cycles from one cycle low to the next, and at least some of the signs that are used to identify these turning points of the cycles is that every rally out of a cycle low into a cycle top brings the price above the 50-day moving average for at least 5 days or longer. Although sometimes if the 50-day moving average is steep going down, as it is over here in late 2019 or over here in late 2021, then only a test of that steeply declining 50-day moving average might be enough for a cycle top. Additionally, I want to see RSI rising by at least 20 points and often well over 20 points, while also slicing through the neutral level at 50. And among other signs is that price often pokes above the Bollinger Bands, often multiple times, to indicate an upcoming cycle top. And the converse is true for cycle lows. Price drops below the 50-day moving average for at least 5 days or longer, unless the 50-day moving average is rising steeply, as in, let's say, early 2022. In that case, a drop down into the cycle low might only test that steeply rising 50-day moving average without dropping below it for any significant amount of time. We want to see RSI drop by at least 20 points, often well over that, and slice through the neutral level at 50, as well as the price poking below Bollinger Bands often multiple times. So all of this history gives us an average duration of 111 days for iron ore, at least over the last 4 years or so. But this duration ranges quite a lot for iron ore, from the minimum of 48 days to the maximum of 74 days. And zooming in on what's happening right now, it looks like we are making a new record for the longest cycle, at least over the last 4 or 5 years. And unless that cycle that started in November last year finished over here in early February this year with only a test of relatively steep 50-day moving average, we do see a poke below the Bollinger Bands as well, to be honest, but it seems that it's more likely that the cycle since November last year is still ongoing, giving us a record duration so far at 176 days, and perhaps it will continue going down into the cycle low over the next few days. Although RSI is already relatively deep into oversold area, and all the way since the pandemic low, RSI has broken below the level of 30 only 6 times. And it's only 4 times that it's broken below the level of 22. That's as deep as it is right now. So clearly we are moving down into the cycle low, and looks like the cycle might actually end, might actually give us that upcoming cycle low relatively soon, based on the duration. It's already longer than the average and longer than the previous record for the last 4 or 5 years of 174 days. Price is already poking multiple times below relatively wide Bollinger Bands, which is usually another sign of a bit of an upcoming reversal in momentum. Looking at more technicals, if you throw in the Fibonacci retracement numbers, as I've mentioned many times in my previous videos, the most common retracement numbers are the 38, 50% and 62% retracement numbers. And would you just look at it, the 62% Fibonacci retracement is pretty close to that round number of $100, which might be a bit of a psychological support as well. Those round numbers often are. And another bit of interesting technical observation here is a bit of a head and shoulders formation with a double head over here, with a neckline around $116 to $118. A break down below the neckline, And in this case, the projected target would be based on the height of this head. If you ignore this wick over here, which didn't last for long, the height is around $15–16. Down from that break below the neckline would again bring us exactly to that round number of $100, which comes close to that 62% Fibonacci retracement. So again, it might actually be a bit of a psychological support there as well. And lastly, perhaps most importantly, let's have a look at market sentiment. I measure market sentiment by this ratio of producers to iron ore itself. And there are actually different ways you might want to color these levels of market sentiment. I had a bit of a different coloring in one of my previous videos. But generally, cycle lows take place with this market sentiment somewhere around the level of 3, somewhere in the middle of this blue area. Sometimes at the ends of very brutal bear markets, as in 2016, 2015, when gold bottomed at around $1,000 per ounce, this market sentiment for other commodities, including iron ore, might actually drop into this green area as well, below the level of 2. The same happened during this brutal pandemic low as well, but unlike at that bottom of the bear market in 2015-16, during the pandemic low, the sentiment didn't stay at this green level for too long. So looking at the ongoing cycle, the members at myfinanceteacher.org know, as all of my trades are actually shown in this model portfolio, that I had been reducing my position in some of those iron ore producers when this sentiment was breaking from orange into that red area. Although I didn't sell everything, as those producers also pay a relatively attractive dividend as well. And more recently, as we had been approaching this yellow line, I started some reaccumulation of those producers, but with a tiny amount so far. Now though, with a bit of a breakdown in iron price as well, perhaps a cycle low is actually upcoming. And if ore price doesn't continue too long for too low, we might see a bit of a positive divergence over here on the sentiment. That's when the iron ore gives us a lower low versus perhaps a bit of an upcoming higher low on the sentiment over here. And of course, a positive divergence is also often an indicator of an upcoming reversal in momentum from a downtrend to an uptrend. So let's see what happens to ore as well as producers over the next several days and a couple of weeks. And if this sentiment reaches the blue area, I might actually accelerate my accumulation a little bit. And even if iron ore itself doesn't drop too further down below that $100, if the general stock market itself drops down, say perhaps due to some Fed announcements, that might actually bring iron ore producers way down even versus the iron ore itself, bringing this sentiment level down into this safer blue area. And in either case, something interesting is going to happen over the next several days to a couple of weeks. So I keep my eyes peeled, ears pricked up for what's happening on the markets and for what you want to tell me down in the comments below. So share your opinion on the markets, and of course remember to give this video a like and subscribe to the channel. Have a productive Monday. Bye bye.